Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Welcome to another video on your channel Profit and Equities. Now friends, we have recently created a free Telegram group for our YouTube channel subscribers. If you want to go ahead and join the group, please go ahead and click on the link provided in the pinned comment and also in the description of the video. The group serves as a platform for getting your queries answered, sharing knowledge, and also getting updated with any stock market information at the earliest. Now in this video, we'll be talking about a very high quality company which ace investor Samir Arora has admitted to buying for his fund. Now friends, Samir Arora is one of the most successful and well-known investors in the Indian stock market. Now he does not generally share his buys or sells in the public domain, and it may be a rare instance when he has openly declared his purchase of a stock. Now this company was also acquired by Rakesh Jhunjhunwala during the previous quarter, and this makes it doubly interesting. Please watch this video to know more about this company. Now the company in question is the Indian Hotels Company Limited, which is available at Rs 108.65 and the face value for it is 1. The symbol for it is INDHOTEL. Now Indian Hotels Limited engages in the provision of hotel services. It operates through the Indian and overseas geographical segments. The company was founded by Jamsetji Tata in 1899 and is headquartered in Mumbai, India. Now looking at the 1-year chart, this company was consolidating for the first few months of the year, but then had a hard knock during COVID. However, the company seems to be recovering now and is probably one of the safest plays in the hotel segment, which we can bet on for a post-COVID recovery. The market cap of the company is 12,921 crores, which means that this company is a mid-cap one. The EPS of 0.58 translates into a very expensive price to earnings ratio of 187.33, which is also much more expensive when compared with the industry price to earnings ratio of 28.17. However, what is pertinent to note here is that this sector has been significantly impacted by COVID and hence the numbers may be a bit skewed. The book value of the company is 43.07, which translates into a price to book ratio of 2.52, which is still okay. The company has a debt to equity of 0.8788, which is on the higher side. However, the company has been satisfactorily reducing its debt over the last couple of years. The return on equity for this company is 0.0814, which is also slightly on the lower side. The company's dividend yield is 0.46, whereas the promoter holding is below average at 40.75%. None of the promoters holding is pledged. Samir Arora has also gone on to disclose that he bought this stock due to it being available at dirt cheap valuations, but since then the company has run up 35% from his purchase price. Thus, it might be in our interest to just add it to our watch list and not immediately jump in. Please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended only to be a piece of news. Thanks for watching, and if you have not already subscribed to our channel, please consider doing so.